June oil futures contracts have dropped more than 40% as crude continues an unprecedented sell-off. This, of course, all because of COVID-19, the coronavirus lockdown, and a chronic drop in demand. Kate Moody is our business editor, and I'm pleased to announce she is standing by. Kate, a very good evening to you. Tell us, how did the market fare today?
Well, perhaps less shocking than yesterday's close, Mark. US WTI prices have come out of that negative territory. That was the unprecedented moment when we saw traders actually paying buyers to take that oil off their hands. On Monday, we briefly dropped to negative $40 per barrel for oil that was going to be delivered in the month of May. That contract rolled over today to focus on June deliveries, and we saw prices settling at about $11.57 per barrel. The international benchmark Brent crude dropped below $20 per barrel for the first time in nearly 2 decades. And analysts say that's actually more significant even than the U.S. prices because it gives a better reflection of the state of demand around the world, and demand is basically non-existent. The International Energy Agency says that global demand hasn't been this low since 1995. Now, the plunge in oil prices has also dragged down stock markets. We saw the major European indices losing about 3%, losses of between 2.6 and 3.5% on Wall Street this Tuesday. There's still a lot of uncertainty about where the oil market goes from here. And while those negative prices do seem to have caught traders and analysts by surprise, they could be back in the short term while there is still too much oil and essentially nowhere to put it.
Meanwhile, Kate, Donald Trump pledging his support for the oil and gas industry. What might this entail?
Well, it's probably going to be some kind of financial aid, although we don't know quite what. Especially a lot of oil companies in the U.S., especially small ones, are facing massive layoffs or possible bankruptcies. One analysis says that up to 1,000 small U.S. oil companies could go bankrupt if oil prices remain at their current levels. The U.S. president tweeted that he will never let that great industry down. He asked for a plan to make funds available to secure, quote, these important companies and jobs long into the future. Now, the government, of course, can't create demand for oil, which is what the industry really needs, but it can help with storage. Some U.S. lawmakers have suggested the government could buy oil to fill up its strategic petroleum reserve. Others think that foreign oil imports should be banned or face very, very steep tariffs. There have even been suggestions that the government could pay oil companies to stop pumping oil altogether. Now, the American Petroleum Institute, which is the largest oil and gas lobby in the country, says that it's not looking for a bailout, but it does want access to the emergency lending facilities that have been made available.
And Kate, a bipartisan agreement over a near $500 billion relief bill. Tell us more on this.
Well, this has been in the works since that $350 billion fund for emergency business loans ran out of money last week. That was part of the $2 trillion stimulus bill, which was approved back in March. We understand it's going to be topped up with a further $320 billion with some restrictions this time on what kind of companies can apply for those emergency funds. There's been a lot of criticism that big chains have been getting those small business loans in recent weeks. The bill will also grant about $75 billion to hospitals, $25 billion for coronavirus testing. There could be still more financial stimulus to come. Donald Trump says he wants to get his hands on more money to hand out to municipalities and states in a separate bill. And a reminder that these emergency loans are really intended for companies that agree to keep paying their staff. It's meant to prevent more layoffs. We've seen 22 million Americans file for unemployment benefits in the past 4 weeks. This is an effort to try and keep a cap on those really staggering numbers.
Kate Moody, as ever, thank you very much indeed. Kate Moody, our business editor, joining us from home as part of our social distancing to try to prevent the spread of COVID-19 around the staff here at France 24. Kate, as ever, thank you very much indeed.